Welcome to this morning's episode of Canadian Mortgage Weekly. It is Thursday, 11:30, and we're here with episode 58. Thanks for joining us. My name is Sam Thompson, and of course, we're joined with Joe Bladek. Joe, how are you doing this morning?
Hi, everybody. Yes, doing pretty good. Thanks for asking, Sam. It's a good day out there today. And yeah, looking forward to today's episode. We got a lot of great content for everybody today. And how are you doing today, Sam?
Yeah, I'm doing good. Like you were saying, it's a nice blue sky day. It is pretty cold. I've been seeing some cold advisories. So, might not go out, but it does mean good skating conditions hopefully soon. So,
Yeah,
hoping
there
to.
have been a lot of cold advisories and all that. We did get a dump of snow as well.
That's right.
The last few days, it seems like we got a lot of snow, a few dumps of snow at least, right? And then skating, yeah, that's something that we've been wanting to get into as well, right? All the rinks are opening around town, so that's pretty neat.
Yeah. I've been reading I think it's up in Huntsville. They have a trail that's actually like iced over, so you can skate through a trail. So, I like trails, so I might try that out once it's maybe not this cold, but cold enough that the ice will be good condition.
You bet. That's right. Yeah, that sounds good. I heard of that trail. I think that might be Arrowhead Park, if I'm not mistaken.
Yes. Yeah.
That's great. So yeah, with today's weather, it's really good to be able to do that. And with the lockdowns and the restrictions, like being outside and being outdoors, it's a great way to just be able to get outside and enjoy what we have going on right now when restaurants are still closed.
Yeah.
Gyms are still closed. It's hard to really do anything like that.
It's hard in the winter, so you really have to get creative for, finding something to do that's not just watching a movie or something like that.
Exactly. And that's really easy to kind of fall back on and just watch a movie and do that sort of thing. But then you end up watching all the movies. So
that's right.
Anyway, speaking of really interesting movies and things to watch, thanks for joining us today on Canadian Mortgage Weekly. We are really pumped that you're with us today. Would love to just pop right into these stats here for everyone. We'd like to cover off some imperative and important statistics when it comes to your mortgage and your home buying process. So Sam's just going to bring these up here and we'll just dive right into it.
Yeah, absolutely. So, it's been definitely big news for us in terms of the bond yield. We watch this metric, every single week throughout the week to see where it's going, where we're going to see the fixed rate at. And even looking from where we were at last week, there's been quite a jump. The bond yield's currently sitting at 1.6%, which is, surpassed the previous high that we saw, earlier in 2021.
Yeah, it really has jumped quite a bit these last few days, and seeing that it's not been alarming because we have been anticipating and kind of watching this trend here, but it is a sign of things to come, I would say. And seeing that the bond yield has broken the previous high set in, the December 2021 timeline. I'm not sure how much higher it can go, but at this point, we are trending higher at the moment. So because of that, Sam, I think we'll see fixed rates point higher this week as well as next.
Yeah, absolutely. I know that there's been a couple. I know BMO, TD, and National Bank, I believe, have started to raise their rates, whether it's, as a response to this, but we might see it become more common across the board. And it'll be interesting to see if we, level off at all, or if we start to see the bond yield increase even more.
Yeah, it'll be interesting to see that for sure. Keep in tune with Canadian Mortgage Weekly here. In the meantime, fixed rates are still low comparatively. So if you are looking to get into the market for a fixed rate and lock in something, it's still a good time to do that before the rates do increase any further. Yeah.
Yeah, and then moving along to our metric for tracking what the variable rate is currently at, the CDOR rate. And as of the most updated data, we saw that there was yet another rise. The rate sitting at 0.562%. Last week it was in, the mid 0.4%. So we're seeing that it's not just limited to the bond yield, not just limited to fixed rates, but we're seeing almost across the board, all of these metrics are starting to increase.
They really are, Sam. Yeah, having these metrics increase like this, really setting the stage for things to come here. Not only is the bond yield increasing, but with the CDOR rate being the way it is, variable rates looks like could be on the way to change too. I know that we have a really exciting announcement coming up next week with the Bank of Canada coming out with their rate decision.
Right.
Yeah, there you got the slide there. Thanks very much. Next week on January 26th, we will cover this event live actually on Canadian Mortgage Weekly starting at 10 a.m. Join us at that time for our pre-rate show with Sam and Joe on our Bank of Canada live interest rate announcement for our special episode 59 on Wednesday next week. Mm-hmm. But with the CDOR rate, the way it's been, and some commentary that Sam and I have been hearing out there, it seems like a rate increase this coming Wednesday could be a possibility.
Yeah, I know that from a few different sources that I was reviewing this morning, I'm seeing numbers like 70% chance, other numbers like 86% chance of a rate increase. Now, whether that's just 25 basis points. I have even seen a possibility of, some not necessarily expecting, but not surprised if it goes up 50 basis points. So it's definitely an exciting episode, and the live coverage is going to be something you're not going to miss, especially if you are somebody in a variable rate mortgage.
Absolutely. Don't miss this live coverage. And it'll be our first pre-rate show of the year. So we are looking forward to having a good kickoff on that as well. Mm-hmm. Moving on to the national house price average. I know that there has been a lot of talk about this because we did see national house prices peak at 720,000 and change the prior month. Now with the new data, Sam, the new average price has decreased to 713,500. I know that comparatively to the prior month, it's a little lower, but overall, year over year, it's still a quite tremendous increase in the double digits.
Yeah, that's right. We did see, even though it's a slight drop, year over year was still up 17.7% compared to December of just last year. So I know that this is something that a lot of, realtors like to fall back on, where people tend to track just the month to month growth or price changes in the market. But it's really important to see, year over year where we were at this time. And closing off the year with 17.7% appreciation is definitely something I'm sure current homeowners are happy to hear, with, fluctuations, new variants, lockdowns. Like it's a positive note for all of the people who are already homeowners and are watching their appreciated equity grow even further year after year.
Absolutely, Sam. It is a very good thing for any homeowners there. And just looking at this graph here, we can see the ups and downs that the average house price has had. So this decrease in the last month, it's a very small decrease in comparison to some of the other decreases we have seen in just these past 2 years. As you see, in the beginning of 2020, we saw a small decrease, but followed by a tremendous increase. And then in 2021, even last year, we saw a peak in the early months of the year with a slight decrease throughout the year. So, yeah, and we've seen a lot of the banks, economists, and real estate organizations come out, as we did spotlight on our prior episode in Canadian Mortgage Weekly to start the year off, that prices are set to increase this year again.
Yes. Yeah, I feel like that's something that is imminent and coming soon. Yeah. Yeah. I mean, if you look at the overall trend, like you were saying, with ups and downs, it's been a gradual trend. You can draw the trend line of increase slowly through the ups and downs. It is still on a gradual rise from January of 2020.
Don't take our word for it. It's always up, always make your own decisions from that point. We're
Mm.
always just reporting what other, economists are saying and real estate organizations. Obviously, we're not real estate agents, but we are very much in the market every day. So we'll keep an eye on the average house price. We'll report it again. We'll watch out for next month's statistics on that. So keep in touch with Canadian Mortgage Weekly Live for updates on that. So let's get into the meat of our episode, and that is the 5 first-time homebuyer tips that are so 2021. And I'm really pumped about this because these are tips that a lot of people have been given year over year. And even up to last year, and then this year, I'm seeing these folks come to me to apply for a mortgage, but they can't because the tips don't work anymore.
That's right. I mean, we were talking earlier about, needing to get creative with activities and ways you're spending time. So we're also seeing that in a lot of first-time home buyers, those, old tricks, the tried and true answers and, tips to get ahead. They're not quite as useful or don't have as much traction as they once did.
They definitely don't. So, one of the tips, if we can just jump right into it, one of the tips that I've seen a lot of people get, and what I'll do is I'll illustrate each example here. But for example, the single person wanting to buy a home, whether or not you're on your own or separated, or whatever reason buying a home on your own, even if you have a high income, a high credit score, your car is paid off, and you have no debt. And keep in mind, a high income. So we're talking maybe $90,000, $100,000 here for your income. In this market, what's that going to get you? Even if you have the full 5% down payment saved up, fortunately, not really anything. In any major center in Ontario right now, we're not seeing anything open up for someone like this. And it's heartbreaking.
Yeah, for sure. I mean, we've seen a quite gradual trend, but I think more significantly over the last little bit where, yeah, the idea of a single applicant, a single purchase is becoming much, much more rare. Like you're saying, that's the perfect client, right? Would have high income, good credit, no debts, and it's still the prices are just outside of their budget of what they're able to qualify for.
I agree. It's sad, but unfortunately, no longer does it work to just aim for a high income, high credit score, no debt, and your car paid off and 5% down. That is no longer enough to buy in a major urban center in Ontario, unfortunately. The second tip that is dead, if you are a dual income middle class household, making together, say, 40,000 each, so 80,000 together, or even $50,000 each, so 100,000 together, and you've been told to save 5% down, and you've been told to pay off your credit cards, and you've been told not to have a car loan and to drive a old late model car into the ground just so you can get your first home. Unfortunately, Sam, that's no longer going to do it in 2022 either in any major urban center.
That's right. I mean, when the single applicant file does not work, we look at, can we add your spouse? Does your spouse have income? But like you're saying, we're seeing that even if there is a dual family household income, it doesn't quite make it in the market anymore.
No, it's really unfortunate. And those are two real possibilities up until last year that could have been a first-time home buyer.
Right.
The third tip here that we have is, well, if I can't do it on my own, or maybe my income's not high enough, maybe only a 5% down. Maybe I'll use the first time home buyer incentive and increase my down payment to 10 or 15%. Well, unfortunately, in this case, Sam, we're seeing that the income threshold is fairly low for what really you need to qualify for any realistic priced home in any urban center. I mean, the average price we're looking at is $713,500, and the price limit is too low really to get into the market because all homes have really gone up tremendously since then.
Absolutely. Yeah. The theoretical max is sitting at around 505,000. So it's not even like, a rounding error, you're off by 30,000. It's like, it's quite low, even using, programs that are available through the first time home buyer incentive. I know it was an exciting opportunity when it was first released. And, in Toronto and Vancouver, they have upgraded the incentive as well. But again, we haven't really seen that reflecting in more homes being purchased through this incentive.
Exactly. I think I remember last year we did maybe one or two clients on that incentive. And when I did speak or hear from a CMHC rep, I think they had only done not very many across the whole country. It was just one of those things that even though the government had put it in place, there wasn't very many people taking advantage of it, just simply because they could not. Also, number 4, and that kind of relates to number 3, but the 4th tip, and that's been something that we've told clients before, and that's if you really can't afford anything, you have good income, you have good credit, you have low debt, a lot of the times we can tell a client to save your way. But in this case, really can't save your way to buy a home these days in 2022 because inflation.
Yeah.
House prices are just exponentially rising quicker than what anyone can save right now. And that's causing anyone that thinks that they can do it on their own next year, whereas maybe they can get into a home now in an alternative way. It just ends up getting, it either stays the same distance from where you've started, or the goal just gets further away because of inflation.
Yeah, it's unfortunate, the old-fashioned way of, just saving up, making a bigger down payment, getting that minimum amount. It's almost a cat and mouse game of trying to catch up to a surge in house prices. We're looking at the national home price average graph, and although now it's leveled out a bit from even 2020 into 2021 was quite a huge home price increase to make up that difference on a minimum down payment. Can be very challenging for a lot of first time buyers.
Yeah, definitely. And I know there was down payment programs in the past too, and that moves us to number 5. 5th tip for 2021 that's dead in 2022 is using down payment assistance programs. I think we had our last one last year there, Sam. But right. with this program going into 2022, the max income is too low and the max home price is too low. And it's just not feasible for anyone to really get into the market with these programs, even though they're built to help first-time homebuyers to get into homes through these programs.
Exactly. A lot of them are very favorable, with 5, some of them even offering 10% towards your down payment. They're forgivable after 20 years. So it seems like a perfect scenario for these first-time home buyers. But again, like you're saying, keeping up with inflation seems to be a difficult task for a lot of these programs.
Yeah, it is a real difficult task. So those are the 5 tips from 2021 that are dead. I'll just go through them real quick here. High single income, high credit score, no debts. That doesn't really cut it anymore. Middle class dual income, with no debts, paid off cars, that really doesn't cut it anymore. First time incentive for the first time home buyer, that really doesn't work anymore. Saving your way to a home purchase, that unfortunately doesn't work anymore.
Mhm.
And then down payment assistance programs, those just don't fit anymore. So what are these first time home buyers going to do? And Sam, we have a list of 5 new tips for 2022 that we're going to share today.
Yes, we do. It's the light at the end of the tunnel. By getting creative, there are some options that are still available for first-time buyers. And the first one is one that, we chat about a lot on this channel. It, came into normalcy the end of 2020 into 2021. And I think it's become essentially a staple almost for any first-time buyers. And that's just the getting a temporary co-signer. So this could be a family member, a parent, an uncle, somebody to be on title with you so that we can add that additional income to the file. Because again, as we're saying, the even a dual family income doesn't quite cut it. So having that extra family member on can really increase your chances of getting a property.
Exactly. It's a really good remedy, and it doesn't even have to be for very long. And you're also able to secure a 5-year fixed mortgage, which typically is the most favorable rate, and then also remove that co-signer within that term without triggering a prepayment penalty. So that's really key. Yeah, it's a really good one there, Sam, because having a temporary co-signer can add that boost for, like you said, the single income earner or the dual income earner to get in that house and to actually get into the market right away without really having to wait, or, hopefully they're not even using the tips from last year, because that won't really get them anywhere.
Yeah, exactly.
So the second tip that we have for 2022 is, if you are finding yourself in a situation where you are dual income and you're not able to really do anything, then what we're seeing is these families that are buying homes, the way they are able to do it is each partner themselves has a side hustle. And so they have a full-time job and they also have a side hustle. And then, not only does each partner have a side hustle, but in addition to 2 full-time jobs and the 2 side hustles, the partners themselves have a side hustle that they are doing together. So 5 streams of income, and we've seen that before, and those folks are able to really get into the market, but that's a real extreme way to do it compared to a temporary cosigner.
It is. It's definitely, I guess, for the people that maybe don't have a temporary cosigner available or who are very adamant on making it on their own. Because it's also important to note that, if that income is to be required, or sorry, is being used, it does have to be for 2 years. So it can't be, a brand new side hustle that you just started last month. We'll need some time to actually be able to use that income towards the purchase.
Point there, Sam. Yeah, and that's something also that a lot of people don't realize. They'll start driving DoorDash for a month, and then all of a sudden be applying for a mortgage for property. We really need to see some stability in that, like you're saying, in 2 years is standard. So if you don't find yourself in number 1 or number 2, let's look at the bank of mom and dad. That has been number 3. And wow, have we seen the bank of mom and dad appear in 2021? And I think it's really going to become a standard expectation in 2022.
Absolutely. We saw, a huge increase of, high gifted down payments from parents and all that financial assistance. We've even done a video looking at the potential of getting a reverse mortgage if your parents are in advanced years, so that they can free up some of the equity in their home to use for a gifted down payment for their children. But it's definitely been something we've seen relied on heavily. And it's important to know as a home buyer that the market's drifting this way, where a lot of first-time buyers require that financial assistance from their parents.
And the parents are able to do this quite easily these days by accessing their home equity. A lot
Mhm.
of lenders out there are able to increase their mortgage for the mom and dad to take that extra out for the children. And a lot of the times with the lower rates or just some of these lenders that are available for seniors, they're able to do this without a payment, or the payment itself is much lower than what it would have been because the rate is lower now as well.
Right.
Yeah. So number 4, the other tip for 2022 that is emerging in terms of a way to buy a home. And we've seen rent to own before, but this is called fractional ownership. So we've seen this where clients themselves have high income, but don't have savings or
Mhm.
have partial savings. But essentially, good clients, they want to get in the market and they're okay with having an investor own part of the home.
So it's a creative way to get into the market for sure. We've seen the emergence of a couple companies. I remember we had covered one that started up out west and a few more in Ontario. Even the rent to own models that do exist now can offer you some alternative situations or circumstances to get into the home as well.
Yes, they really can. So definitely contact us if you have any questions about these two models, because they are emerging and we would like to help you walk through those in detail off the air. But number 5 would be multi-family home units. So this would be a home that has 2, maybe
Mhm.
3 or 4 units completely separate, but we're actually seeing maybe the like families moving in and owning the home together but living separately. And Sam, you saw that last year as well.
Yes, yeah, we did see that deal come to its final purchase. I believe the mother was looking to downsize anyways, so the family was able to purchase together a duplex where the mother got the additional unit, and the two children had received the main unit. So it was a creative way to do it because the mother was looking at downsizing anyways. And it made it a lot easier again because having that additional income like we had seen doesn't necessarily cut it even if you're a dual income family. So by buying together, it really did make the process quite simple.
Right. Yeah. Good
Mhm.
example too. Well, those are the 5 new ways that we are seeing as mortgage professionals emerging in 2022, and how first-time home buyers are moving into the housing market. No longer is it just enough to have good credit, low debt, and a high-paying job. This is simply because of the house prices and the sheer uh, you know increase in the way
Mhm.
they've gone, that we need to change the way we are buying homes, because we are not seeing any changes made to make mortgage qualifying any easier. As a
Right.
matter of fact, for the last few years, we've seen mortgage qualifying get a lot more strict.
Mhm.
And with that, these are solutions available for all you first-time home buyers that are looking to get into the market. If you're looking for additional solutions to get into the market, we have an upcoming webinar on January 27th at 7 p.m. where Sam will be speaking about some of the programs available for first-time home buyers specifically. And Sam, tell us a little bit about that.
Yeah, the first time homebuyer webinar is it's a perfect first step in the process because we cover off a full overview of what the process looks like, things to get in line, a lot of mortgage tips that are even closer to the beginning of the process, such as qualifying income, what you can expect from using a mortgage agent or a mortgage broker. And then again, as Joe was saying, looking at some of the grants and incentives and ways to get money back when you buy, because there are a lot of programs and grants out there for you. So it's a really good place to start. And we can schedule a further appointment from the webinar to get you guys in the best position to purchase in what's shaping up to be a tricky market in 2022.
Great. Thanks very much for that, Sam. And thanks again for joining us today on this episode. Sam Thompson is a mortgage agent. He's been living in Barrie, originally moved from Ottawa just about 2 years ago now. Yeah, Sam, he's married, has a little puppy there, and also been in the mortgage industry for just about 2 years as well. So, Sam, it's always good having you on Canadian Mortgage Weekly, and thanks for being here today.
Yeah, thanks so much for having me, for the introduction. It has been, a good few years down in the Barrie area. And of course, for anybody who doesn't know Joe, Joe is a mortgage broker in the Barrie Simcoe area, living in Aurelia with his wife and 2 children. And Joe, you have been in the industry for over 11 years, so definitely appreciate the insight and the knowledge that you bring to all of these episodes in each video. So thank you again for having me. It was a pleasure.
Thanks very much, Sam. Always a pleasure to be here myself as well. Join us next week for our special pre-rate show for the Bank of Canada interest rate announcement, and they'll also be releasing monetary policy, if I'm not mistaken, 10 a.m. January 26th. And then don't forget, we also have a regularly scheduled episode Thursday at 11:30 a.m. And I think, Sam, we're covering new to Canada this week, next week.
Yes, we are.
Perfect. That's great. So we'll see you next week on Wednesday, and thanks for watching.